Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is April 16, 2024. This is the Kickstart video where I take a look at three of the major currency pairs from a technical perspective: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. So with that said, let's get started. We're going to start by taking a look at the euro versus US dollar. This is the 4-hour chart of that currency pair. And what we saw in trading last week was last Friday, as a matter of fact, was a move below this swing area between 1.0655 and 1.0675. That momentum sent the price below that level, increasing the bearish bias, but randomly stalled more or less near the 1.0622 level. Maybe we can go back in time over here where we had all these ups and downs and say that, well, it was sort of near that level, it's sort of near that level. You can see there's maybe this level right here, but you can see that there's, this is a period of where there's lots of ups and down consolidation. So there wasn't necessarily a lot of technicals going on through here. It was a point of transition before the market moved to the upside. So, nevertheless, in trading yesterday, we came up and moved up back into this swing area through here, which is more defined from different swing lows. Our swing highs and swing lows right here where the market base before moving to the upside. So this area I feel comfortable as the next level, that if we were going to go higher, we need to get above the 1.0675 level to give the buyers the added confidence. Conversely, sellers can also lean against that level, keep the lid on the pair, keep the bearishness going. That's what happened in trading here today. The market moved down lower, and we actually made a new low near the 1.06 level. Just short of that before rotating back to the upside in a squeeze over the last few hours, I guess, of trading in this currency pair. So when I look at this chart, the story remains the same. We need to get above 1.0655 to 1.06750 to increase the bullish bias. Alternatively, if you want to sell, you can lean against this level with the stop above the 1.0675. I think if we get above that level, then we look toward the 1.0694 level and maybe even the 61.8% retracement at 1.07133. This would be a key level on any sort of rotation back to the upside. But right now the sellers are more in control, even though the price is moving higher and higher on the day. The buyers still have to prove that they can get above this area right here to prove that they are taking more control in the euro versus US dollar. So just be aware of that. Let's take a look at the dollar versus yen, and the beat goes on for this currency pair. We are moving higher in trading here today. Yes, remember this high right here is a 30-year high. If I go to the monthly chart, it's in this area right here. There's really not a lot of resistance until 165.04, or that would be the next key target on the top side for the dollar versus yen. This is a monthly chart, so we don't see all the daily that went into going back to what happened in 1990 back here. But it's just the decision is more of where does the bias turn more negative. And in trading yesterday, so I spoke about getting below the 38.2% retracement of the last trend move to the upside, and we did have a swoosh or a move quickly to the downside here, but we did find support buyers ahead of this 73 level right here, and we saw the price rebound rather quickly to the upside. So if we were to just move this up here and take a look at the 38.2% retracement, and now comes in at 153.89. What we know is that if you're a buyer and you've been riding this wave to the upside, that until the price can correct down below the 38.2% retracement, and maybe even the 50% retracement, and maybe even the rising 100-hour moving average, the buyers remain more in control. We are trading at 30+ year highs for this currency, and anything can happen, but there's nothing to me that suggests that the sellers are winning and the buyers are not winning. So be aware of that. Buyers still remain in control for this currency pair. Let's just look at the 5-minute chart, and you can see the 5-minute chart like we did yesterday. We had the 100-bar moving average kind of holding support now, and that moved to the downside yesterday. We did move below the 100-bar moving average, and in trading in the early Asian session, we did move below the 100-bar moving average, but we did a pretty good job of holding support against the 100 and 200-bar moving averages on the 5-minute chart. So that may also be a level that if you're anxious to sell the dollar versus yen, we need to get below both the 100 and 200 bar moving average on the 5-minute chart to give the sellers some confidence and at least some level to lean against. So if we go below those levels, you won't want to see the price move back above those levels. That's what that means. So, but until the price starts to move below these moving averages, the buyers are more in control. It's just that's just the way it is. Finally, let's take a look at the sterling versus US dollar. And this swing area right through here, this yellow area right here, goes back in time. If I go back to, let's say to this point right here, we have it swing low, we have a swing high, we have a swing high, we have a swing high. Then we formed a base before moving to the upside. So it wasn't until last Friday when the price moved back into the swing area between 1.24278 and 1.2449. We moved higher on Monday and then rotated back to the downside and trading here today. We did move below that swing area. Should have increased the bearish buys, but as you can see, we've since rebounded back to the upside. And we're also trading above the 50% midpoint of the last move to the upside for this currency pair, going back in time to, back here in October. And it's not seen on this chart, but back in time down there from the low to the high right here. I think that was a 2023 low. So we are trading above and below the 50% retracement at 1.24646. That's going to be a barometer for traders, both buyers and sellers in trading here today. If we start to trade more comfortably above the 1.24646, we could see some short-term buying or some buying in this currency pair that could take the price higher. Remember, we broke outside of our value area box through here and then held the resistance against it here. So, when we go higher, we'd start to look toward this level right here, this level right here, which basically comes in 125.34-ish type area as levels of resistance going forward. So be aware of those levels on the top side, but that only comes if we can start to trade above the 50% retracement for an extended period of time. Alternatively, if the price moves lower, the 61.8% retracement becomes the next key target. The level more or less corresponds with these levels right through here before the market based to the upside. So be aware of that. So there you have it. A look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.